Looking at crude, Blake, if you look bring up the daily chart here, look, we saw an absolute collapse last night. I heard people saying it was because of a death cross coming through the 50, 200-day moving average. I had to chuckle. I was like, anyone who's basing their investment strategy on that, especially when you're talking short-termism like that. Maybe it's true, I don't know. But I think what you've seen is demand destruction. We saw China extending the lockdowns in Chengdu. I think that was part of the issue. But I think when we traded through those recent lows that you've seen on those double bottom, I think you saw just stops coming through. The market gave up. The bids dried up and bang, just straight through the elevator. Down the elevator she went. The question is are we selling rallies in this? I'm a seller of rallies. That's my play of the day. I like it into 85 on a bit of a retracement. I'd be selling back into that. This move that we've seen means everything to me. I think this is so important for risk more broadly. I'm a seller into 85 for a move back down to 80. You've got a stop loss on a close back above the 5-day exponential moving average on a daily basis there. But I think this one starts to trend. I think we sell rallies into 80. I think that's my play of the day today.
All right. Well, I like it, Chris. I do. I have to admit, that people, when we talked about crude going to $75 a few weeks back, I had some people saying there's no way. Well, maybe we are on our way. So let's take a look at my play of the day, which will be the dollar yen. Now, this is where I'm playing yen, and I'm playing it tight. You got to play the yen on the long side. Keep it tight. I'm looking for a move right back down to 140, maybe even a little bit lower than that. Maybe you get a little bit of luck and you get some intervention behind you, but you got to keep it tight. Now, for those of you that are harmonic pattern traders, you might see that as a butterfly. You might see that as a deep crab. You might see it as however you see it, but I've had it set up just like this, literally for the last week, targeting 145, and we hit it to the pip. Nice trend line up there, divergent relative strength. It's overbought. And so I think right now, it gives you that opportunity that if you want to buy yen or sell dollar yen, you can do it with a tight stop, but you got to keep your stops tight, Chris, because in a market like this, we've seen it. They get aggressive. There's nothing stopping us from going from 145 to 150. So if you are going to play yen or dollar yen to the short side, trading counter trend, keep it tight, keep your stops there. And if you got stopped out, you get stopped out. But sometimes you got to take these opportunities when you see them.